Hey everyone, welcome. How's it going? I hope you guys had a great day today. Market was a little boring. We can take a look at that. Just as a reminder, if you want to hop on to my Telegram channel, I give out gamma levels. I give out all sorts of interesting stuff there. But the most consistently, I give out those gamma levels, and they're pretty good. If we look at today, what I sent out over there was. This morning, right here, I said bullish pressure and SPY so far. I sent that about 47 minutes after the market opened. I said that we are concentrated. Spelled that wrong, typo, concentrated around 628. And we noted that there's exposure leading all the way up to 628, which implied that as each level got hit, there would be pressure to go higher and higher until we hit 628. And let's see what happened during the day on that SPY. We went up to 626, then 627, then 628, and we ended at 627.99. So today was basically exactly spot on. So those gamma levels are super helpful, especially if you're going to trade 0DTE or you want to have an idea of what the overall markets might do in case you need to make some decisions about entering a trade or exiting a trade. So that's what those gamma levels are used for. So if you want to hop onto my Telegram channel, you can do that. I already closed it. It's basically the tradingpub.com/Kane if you want to enter that. And then I also want to remind everyone there are now scammers who are using AI videos of my face and of my voice telling you to do certain things and send them money and all sorts of things. So just be careful. Do not fall for it. The only place you'll hear from me is right here on this YouTube channel and inside that Telegram channel that I just shared with you. So anything else is not going to come from me. If you get an email, then it's kane@investpub.com. And I will only reply to you. I won't initiate that email, and I certainly won't initiate an email to ask you for money or to invest or anything like that. Okay, so I only provide market analysis and trade signals. I don't do anything else. I won't invest your money. I won't touch your money for you. I won't do any of that stuff, right? So my days of money management are over, and if I was going to do it, I would do it through very, very official. I'd start my own hedge fund or something like that. I wouldn't be asking you directly for money. So with that, let's take a look at what happened in the market. So one thing I wanted to clarify for everyone, hey Peter, hey Dan, and hey John, where do you get updated gamma levels, and are they updated intraday? Well, I get them through my own software that I am developing for a wide audience. I don't know how long that's going to take. I'm still waiting to hear back from the initial talks with developers to kind of get a timeline of how long that might take. But yeah, so for now, I don't know what to tell you. Yeah, mine are updated in real time, and my goal is to get software available to you guys that would be updated in real time as well. Hey Tim, how's it going? So one thing that I want to clarify, because you've heard me talk about pullback for a couple of weeks now, maybe 2 to 3 weeks, where we're saying that we needed pullback. Actually, it's probably been, yeah, maybe almost 3 weeks where we've been talking about that. And we haven't gotten that pullback. I also said that we don't necessarily have to have one. We could just consolidate until we hit the EMA 8 and then potentially move higher. And so far, it kind of sort of looks like that might be what is happening. So you might have noticed that if you're any of my alert services, I never issued a short. And so why is that? If I'm talking about a pullback and I talk about how you have to trade your view and then maybe hedge yourself if you're wrong, then why am I not issuing any shorts? So I need to clarify this for you guys. So I think that it's time for a pullback. But I trade my view, which means I trade what I see right now. And if I kind of look a little bit into the future, which is what the afternoon session is about, is try to look a little bit into the future so I can prepare myself for what might happen. but I'm not trading based on this information. I'm not trading based on this analysis. So anytime you've seen me talk about a stock since we started doing this, I never said, hey, let's put in a trade. I only one time said I would be comfortable if I wasn't able to look at the markets while they were open, then I could put in a trade right now and see what happens in the morning. But by far, I would prefer if I see how it trades in the morning and then make the decision then. So what we're doing here is getting a forward view, so that we can prepare, not so that we can actually execute and trade. So that's two very, very different activities. When I do an analysis in the morning, we're doing the same thing. We're preparing for the trade ahead, for the day ahead, so that I can make a very quick and easy decision if I see an opportunity during that day. So we want to be very, very careful there. I don't want people to say, Kane says we're going to have a pullback and therefore I'm going to start shorting stuff. No, that's not the point of what we're doing here. What we're saying is there could be a pullback coming forward. So I want to watch out for signals that pullback is actually happening, and then I will trade it. So this is what it means to trade what you see and develop a view for what might be ahead. So for example, if I see that a mile down the road that there's traffic, it doesn't mean that I slow down my car right now. I'm still a mile away. Even if I'm driving at 60 miles per hour, it's going to take, probably like a minute for me to hit that slowdown. So I'm not going to start putting on my brakes if it's a mile away. What I will do though is prepare to put on my brakes, knowing that hey, I'm probably going to have to hit my brakes pretty soon. And what I definitely will not do is put my foot on the accelerator and start going 85, 90, 100 miles per hour. That would be completely stupid, right? So it's the same thing in the markets. I trade what is in front of me right now, but I'm trying to look a mile down the road to say, hey, if I see a good opportunity, should I put my foot on the accelerator? And the answer is no. At this particular moment in time, the answer would be no. And it's like, should I continue to cruise along the same speed right now? The answer is no. I should be preparing to put my foot on the brake pedal. It doesn't, it doesn't mean that I'm putting my foot on the brake pedal right now. It means that I'm going to prepare to put my foot on the brake pedal. So does that make sense to you guys? Is that a clear distinction? I'm going to have to wait for the delay for your answers. Dan says, just want to know, since the net option volumes aren't updated intraday, so wanted to understand what your Telegram channels were representing. Yeah, I get real-time data. Yeah, real-time data. Gamma exposure moving around. So yeah, so it's not just open interest, it's gamma exposure. Okay, Tim says yes, which I assume means that he understands the analogy. Okay, so I just want to be super clear about that. So we're not saying that short. So a lot of people, I've seen people react to other guys when they're talking about, oh, should we go short right now? No. But it could be appropriate to hedge yourself right now. So if you're on Profit Panel today, I talked about a VIX hedge. It could be perfectly acceptable to hedge your portfolio right now. That is completely different than saying, I'm going to turn my portfolio around and start going short right now. Okay. So we will do some evaluation to see if going forward, if that's still our estimation, if we could, or we are still going to anticipate a pullbacks in the near future, in the next mile, or if this is it, we're just going to chop sideways and then maybe just start moving upwards. Because what we see right now, if we just chop off right here and we don't try to look at what's happening tomorrow or the day after, or day after, or day after, all we see right now is this. which is a pretty good and strong uptrend. We're basically saying we're driving down the freeway in one direction. We're not making any turns, right? Maybe we slow down a little bit over here, but then we just keep on going. And then now we've slowed down. So we're just saying, have we slowed down, meaning that we're going to just keep on going again like we did over here? Or are we slowing down because we're going to turn in a different direction? That's the question that we're trying to answer. But again, we're not going to actually trade it until we see it, okay? So let's take a look. Volatility, so always getting a picture of the volatility. What happened today? Today we already looked at that. We had that float upwards, very reminiscent of what was happening over here on all these days that we were floating up like this. Very, very reminiscent of that. However, if we look at the high is at 628.4. 2 days ago, the high was at 627.86, so 0.6-ish or 0.54 above where the previous high was, which isn't that much, but basically we did hit an all-time high again today, and we did close pretty close to that all-time high, and we never broke back down below that EMA 8. This is relatively bullish. This is pretty bullish. We just don't have quite the volume or actually a lot of range. It's not like we moved up a whole bunch. So it's very mild at this point, and we would want to wait and see a little bit further. In terms of VIX just kind of floated back down. And so we are still in that buy the dip type of regime. So which means is that if this is my dip, which is basically just a chop sideways rather than a dip like this one, but this is pretty much a chop sideways also, more like a dip like this one. If this is all we get, then we should be prepared to go long in the market again, okay? But basically we're saying I'm just kind of, maybe my foot is floating above the brake pedal, but I'm not pushing on it yet. And I'm definitely not pushing on the accelerator. I'm not going to go crazy and buy a whole bunch of longs right now, because that's not the environment that we're looking at. So let's take a look at, are there signs of buying? And this is really important. Until we see signs of buying, then this isn't going to go up. Until we see signs of selling, this is probably not going to go down. So far, I haven't really seen anything. And yesterday we started looking at or maybe a couple days ago, we started looking at the NAAIM, and we finally got the number that we're looking for posted today. For yesterday's number posted today, we got 83.69. The previous number was 86.28. Basically, it just barely moved downwards. So what that tells me is we are still in wait and see. What I was hoping to see was that number kind of came down below 80, and then that would be a clear signal that we're going to get that pullback. So it looks like we're going to have to wait another week, and then maybe then we'll start to see a pullback, or maybe then I'll be wrong about that, and then we'll move forward. So if I'm wrong, I'm perfectly okay being wrong with what I see a mile down the road. If I am wrong about what I'm doing right now at this very moment, that is me getting into a car crash, right? So if I'm wrong that the guy in front of me is going to maintain speed, and then so I'm just going to keep my distance behind him, and I say, hey, you know what? He's going to maintain speed. It's safer if I close that distance. I'm going to tailgate him. I'm going to go 5 feet behind him, 3 feet behind him, 2 feet behind him. Well, if I'm right, then he maintains speed, then there's no problem. I'm taking a big risk, but there is no problem. But if he suddenly hits his brakes, then I'm going to slam right into him. I'm not going to have time to react. Okay, so we don't want to be wrong in the current situation. And we want to give ourselves that distance. We want to say, okay, well, I can't guarantee that I'm going to be right. That's why I stay a couple car lengths behind the person in front of me on the freeway. Okay, well, I know that sometimes I'm going to be wrong about the exact current situation in the markets, and that's why I only allocate a certain amount. Okay, so in this case, the distance between the two cars is going to be the allocation or my stop or whatever, however, it's basically my risk unit. So the higher risk I'm taking, the more risk, the more, if I'm allocating 100% of my account, then I'm basically tailgating the guy in front of me. And if I allocate 5%, 2%, 1%, then I'm getting more and more distance between me and that person. And that way, if something happens, I'm only a little bit wrong and it doesn't really hurt me. So, and I'm perfectly fine if I'm wrong about this pullback. Okay, why? Because I haven't started allocating any money to it, and hopefully you haven't started allocating any money to it either, unless it's a hedge. If it's a portfolio hedge, like we talked about in Profit Panel today, perfectly fine. Are you gonna how much is it going to hurt you if your hedge is wrong? Well, hopefully, if you hedge correctly, not all that much, because what you're looking for in that hedge is you're actually hoping that you're wrong and that you lose money on your hedge. That's the ideal scenario for a hedge. It's the exact opposite of your trade. Ideally, you're going to lose money on your hedge and nothing happens and the rest of your portfolio is great and it keeps on making money. So you don't want your hedge to cost you too much. Okay, so NAAIM is telling me we are still in wait and see mode. Let's come back and take a look at it next week and see what happens. The other thing that I need to be aware of is the monthly expiration on options is tomorrow. So it's not too surprising that we're not getting a lot of activity right here ahead of that major options expiration. But once all that capital frees up, it's going to look for a new home. And we want to know where it ends up. We won't know until Monday, but that is going to paint a picture, and either it's going to be the same picture or it's going to be a very different picture. And if it's a very different picture, then we might see some movement instead of chopping sideways like this. So how might I start to get an idea of what that picture is? I can begin to start looking at gamma as well. Okay, this gamma picture is likely to change on Monday. So I can't get a perfect view. I can only get an idea of what the market is thinking for now. So it could be completely different when we come back on Monday. So I need to be aware of that. But I'm just trying to get a clue. It's just a little bit more data that helps me form that view, form that opinion. So if I go out till tomorrow, what I see is large exposure at 630. We've already talked about this before. Now that we've floated all the way up to 628, it is conceivable that by tomorrow we could float up to 630. And then all of that disappears, and then we'll see what happens. It could be that's where we tag and finally bounce and pull back. Could be, no guarantees. But 630, what this is implying right now, unless the picture changes tomorrow morning, is that we are going to react to 630. We're going to probably get to it and then either pin or reject or blow right through it. Right now, if based on what we know and what's going on in the market, then we would say that we'll either pin or reject. The chances of blowing right through it are fairly low. Now, if I start looking out, I can look on Monday, but that's probably not going to give me too much information. More likely the Friday expiration is going to give me more information because we're trying to get this broad, somewhat longer term view, not super long, but not the next day view. We're trying to look a mile down the road, not 10 feet in front of us. So I'm going to go to the 725 expiration and see that, hey, we see 630 there still, which is interesting. So why would that be? Well, basically that suggests more chop. Right? I'm not seeing, but I am seeing some volume right here, a tiny bit of, right? We a little bit of placement above, 10 points above, and then some placement down here over, I guess here, 620, 617. But nothing to get excited about, nothing nearly as large as this. So for now, basically it doesn't give me all that much information. Just say, okay, maybe more chop. Well, I already knew that maybe chop. I wanted to see if there was going to be a different view, an excuse for me to change that opinion and say, hey, maybe that OpEx was the thing that that's going to show us, that's going to trigger our pulling back. And it still could, because like I said on Monday, this could look completely different. But for now, I can't see anything ahead of time. I still have to wait for Monday. Okay, let's go a little bit further down. I believe that would be August 1st. Let me just confirm that. Yeah, August 1st. And now we have a different picture, a very different picture. Because look at this, at 618, a huge exposure right here compared to everywhere else. We still have a little bit at 630, but it's not nearly as much. So as of this moment, the market expects a pullback to happen 2 weeks from now, more than it expects to happen next week. So that's interesting information. Doesn't mean that that view won't change, especially after options expiration, but still, it lets me know that, hey, maybe I have my foot over the brake, but maybe it's too early to put my foot over a brake. Maybe I don't have to put my foot over the brake until next Friday, and then really anticipate that I'm going to slow down. What it also means is maybe if I'm already in position, I don't have to be in a rush to close my positions. But the following week, maybe I should be more prepared to close my positions. So if I'm in positions that are doing really well, if I'm in a trend that is doing amazing, like one of the stocks that we looked at in Profit Panel and in Rogers VIP today was Hood. That this is a super strong trend. So would I be ready to tap the brakes on Hood right now? The answer is, based on what I'm seeing in the broader market, not quite yet. This trend is very compelling, and I don't have a reason right now to hit the brakes. Okay, so next week, I don't have a reason right now to think that I might hit the brakes next week. But I do have a reason right now to think that I might hit the brakes 2 weeks from now. That's what that is telling me. So I'm probably comfortable holding on to this for another week. And again, that might change by the end of tomorrow or come Monday morning. I just have to look at the situation again. Okay, so let's see what you guys are saying. Defensive driving in the market, yes. What is Gamma showing for SPY? I showed that in the morning. One of your services, you commented that it was better to exit the trade because your Gamma's level said that during the day we could reach the 628. Yep, and so that's true. We surpassed it and came to exact level. Yeah, today it was just, that Gamma was just perfect. Given the number of calls, is that an institution inside the market? Yeah, the major exposures in the S&P, SPY, those are going to be institutions. It's not retail traders. Yes, retail traders will barely budge or barely show up in Gamma exposure levels in the market. Calls to puts for 8-1 Gamma exposure. Well, that would be a little bit anticipatory, right? So that's prediction. So if you want to throw on a predictive trade, well, I would treat it more like a gamble. Like if you want to put on a fun trade without too much money behind it, Or if you want to hedge, okay, then that's perfectly fine. But if you're saying like, I want a high conviction, high probability trade, I want a 70% chance that this trade is going to make money, then that's not what we're doing here. We're just saying, we're just getting a picture of, okay, we might want to prepare ourselves, not actually trade in this direction, unless you're doing that gamble trade or you're hedging yourself. So hopefully we've driven that point in. Okay, so we looked at breadth. Oh, I'm sorry, we looked at signs of buying. We're not seeing signs of buying. We're not seeing signs of selling either. We are seeing signs of some positioning of a pullback by 2 weeks from now. But for now, we're not going to trade that information. We could hedge based on that information, but we're not going to trade. Or we could gamble based on that information, but we're not going to trade based on that information. Yeah, exactly, Dan. Like a 2 sigma type move. Yeah. So that what you're talking about is a tail risk trade, a 2 sigma move tail risk trade, which is perfectly acceptable because that's basically like a hedge. Okay. So let's take a look at. There was something else I want to look at. Oh, today when I was on with Roger, we discovered that there was a lot of financials that looked like they were setting up, which was interesting because last week I said financials looked pretty good. And then yesterday I said financials did not look so good. So I want to dig into that a little bit. And so it looks like the entire sector, we're kind of hitting a little bit of a resistance point right here. Maybe we could go up and challenge these all-time highs right here. But for now, this is a nice trend. So if I look at it on purely on just the sector or sector US dollar, then everything looks good. But yesterday, we dug a little bit deeper and we said, what if we look at it and priced in terms of the S&P 500? And we said, ooh, not looking so great. Because before we would have said this and said, okay, we broke above and maybe it's time to go into that in the financials. But now that we are where we are, it looks more like this. It's like, oh, that's not that great. If somehow we get a rebound here and get back above this trend line and above that MA200, it'll look good again. So I would say I'd be super cautious because this is anticipatory, right? So basically what did I start out saying? I said, we trade what we see right now. We develop a view for going forward. And my view for going forward is we're probably going to keep on going down, but there is some possibility, a non-zero probability. And actually, I would put it up probably closer to like 30-ish%, 35% probability of this bouncing and crossing back above that trend line. So would I be trading on that? No, absolutely not. Absolutely not. If I see this cross over, then I can trade on it. All right. So one of my views is going to be right. One of my views is going to be wrong. When I have confirmation that one of them is right, that's when I can trade on it. So I wouldn't be trading on this right now, either way, either direction, XLF. So what that means to me is that if I see something good setting up like this, I'm going to avoid it. Like you would have been right on this and made some money right here. But you know what? That was a gamble anyways, because that was earnings. Okay. So unless I did the earnings of a whole series of data analysis for earnings, then that would have been a gamble trade anyways. So financials for now, I personally, I'm going to completely avoid them. And I don't think we found any financial that we wanted to go into anyways during Roger's VIP session. So it's kind of like before, like it sometimes something looks good, But then when you dig down further, you're like, I can't find any good opportunities. That same thing happened to us a couple days ago with the communications. I said XLC looks really good. Looks like it could bounce from here. But then I tried to find an individual stock. I'm like, none of these look good. And then when I evaluated it yesterday based on XLC SPY, we said, ooh, this is not looking that great. We could bounce from here, but again, that's anticipatory. I can't trade based on that. I can develop a view, say, what are the probabilities of this bouncing back up? What are the probabilities of it breaking back down? And I can develop a view and decide where I'm going to place my foot, if it's going to be over the accelerator or the brake, but I'm not actually going to push my foot down on either one yet. Okay, so XLC was not a great place for us to look for opportunities. So yesterday we determined defense and industrials and SMH. Okay, so this clear uptrend, and we determined that if there is a general overall market pullback, defense may not participate in that, or it might not participate it in nearly the same degree. And that's why we're still okay, comfortable with ITA. And the conclusion here is what's the right now view versus the 1 to 2 week view. The right now view is, okay, this is great trend moving up. We're a little far away from our moving averages right here. So if there's a minor pullback, good to go. And then the 1 or 2 week view, we were talking 2 weeks now, because what we determined in the broad market was that there's the greater possibility of the pullback happening in the second week from now rather than the next week from now. And so, okay, so if I see that starting to pull back and the overall market is pulling back as well, then I'm going to start looking for entry opportunities in ITA well before I'm looking for entries inside the broader market in SPY. Okay, so we said the same thing for XLI. Yeah, it's looking excellent. I mean, yesterday, right on that EMA 8, that would have been good. Or you could say maybe since we didn't look at it until after market, then what would have happened was this morning, we would have looked at this. And we would have seen, let's do a replay. And I'm going to use 5-minute bars. Replay. Okay, gap up, and then a strong move upwards. I could enter here, or I could wait for a pullback to the view up. And since we're before 7 a.m., I would wait for that pullback to the view up. Right there, bam, pullback to the view up, just after 7 a.m. Okay, then I look for confirmation. This is a red bar. I don't have anything confirmed yet. This could keep on trading back down. Remember, I don't want to anticipate. I don't want to forecast. I want to trade what I see. And what I see right now is a red bar sitting right on top of the VWAP. That's not a bounce. I want to see the bounce before I take action. There he is, right there. At the very end of that previous bar was a bounce. Okay, obviously the next bar was down, but this would have been entry. Entry right here. Okay. Am I wrong about that? I don't know yet, because that entry would have come with some, if I'm day trading, okay, I'm probably not day trading, but so far we haven't talked about day trading. But if I was day trading, then I'm starting to look at my risk reward, okay? So where would I stop? Where would I go? But we're not talking about day trading right now. This was a good entry for a swing trade on XLI. Of course, I'm just looking at the sector ETF right now, not an actual individual stock, but I'm just trying to show you what a good entry might look like. Okay, and so if we keep going, okay, it looks like we went down for a little while. Okay, then do we ever cross back up? I don't know. Let's see. So now that I've rejected VWAP, I'm looking very careful. Okay, we broke above VWAP, and I'm looking pretty good right now. Where was my entry? It was right there. Now, if I was day trading, I may have, I didn't need to define my risk reward right here. I may or may not have stopped myself out. But again, I can't, it'd be cheating if I said, oh, let's do the day trading version of this right now. So I'm not going to do that. Maybe we'll do that another day. I'm doing the swing trading version right now. Okay. And so once I'm in, I don't care. Or I don't care because then I'm back to the daily chart. But in this case today, it probably went up because the S&P went up. Yeah. And by the end of it, we were a little bit above our entry point in that XLI. Okay. So that is good entry. My view is that on the daily, it bounced off of the EMA and it went higher and it's following the trend. So I have no problem swinging this until it tells me that it's done. It's done going. Okay. Okay, let's see what you guys are saying. JPM looks great. Near parallel on XLF SPY, parallel channel. Trump will say Musk ate eggs for breakfast and he'll move up. Okay, sounds good. So XLI still looking very, very, very good. So if I'm putting so far, the conclusion was sit and wait. Except XLI, I could make the argument that I can very lightly push on that gas pedal. That's what that told me right there. If I had zero positions, if I was completely flat and I had all cash coming into a market that looked like this, say, hey, we had this amazing bull run. We are chopping sideways right now. It's probably not the best entry point. I want a confirmation before I see a breakout, or I want to see a breakdown pullback because this is just too much of a run for it to not really have a pullback. But again, we only trade what we see currently on the chart. Like, okay, well, I can't really deploy my cash in the general market, and not in ITA either. But in XLI, since I'm on all cash, I can take a baby nibble at XLI. That would have been my conclusion today. If I already had positions, then no, I wouldn't bother because I already have exposure to the market to the long side, and maybe I'm going to hedge that based on what we saw that from that 2-week view. But if I was all cash and I said, well, I mean, does it make sense for me to be in 100% cash right now? We can make the argument yes, because all the SPY is doing is chopping sideways. But if I'm going to make an initial stab or initial position and get out of cash, then XLI is definitely the sector, the only place that we've seen so far where I would have gotten the green light for a baby little step on the gas pedal. Okay. Maybe the other possibility, we haven't looked at it yet, but the other possibility was maybe cryptos. Crypto's kind of going sideways, had a great run. It was beginning to chop sideways. And it might have lost a little bit of ground or chopped sideways in terms of the SPY. Yeah, just chopping sideways in terms of the SPY. Okay. What happened with the crypto stocks we were looking at, the Bitcoin treasuries, are doing okay. Bounce off the EMA higher and heading a little bit higher the last 2 days. Not bad. Very, very wicky though, but not bad. MSTR continuing that trend that we drew before. So sideways chop into the trend. So potential continued moving upwards. That's really good. We also looked at Galaxy oh, wow. Okay. Here I would consider taking profits because I'm hitting that high, this previous high right here. I'm very close to that previous high. I would consider taking profits and leaving a runner. Okay, Hut, yeah, just very steadily following. I mean, this is a lot of chops sideways. Again, a lot of wicks. But if I look at the lows, it's heading higher. Okay, maybe not the highs, but the lows are. So pressure will be building towards the upside. No. John says this is very informative. Good, 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 good. Neat trick with the dividing by SPY to get relative strength. Good. Works with crypto. Yes, yes. ETH, Ethereum. Divided by SPY. Yeah, that's wow. Yeah, we looked at that yesterday too. That's Ethereum's really going. And there is, okay, so there is a little bit of resistance where we are right now, or very close to where we are right now, just above, I guess, or kind of right where we are right now. So I'd be careful with that. I would consider taking some profits and maybe leaving a runner. And then if it does pull back, then entering a new position. But that is really good. Someone emailed me Cardano, ADA. Yeah, same thing. Like a very, very strong trend, breaking above the MA200 and moving a lot higher today. So a lot of cryptos are looking very, very good right now. So I think that if we do get a pullback in the SPY, I think we've already broken correlation between crypto and SPY. So there'll probably be a good number of opportunities within the crypto space. And was there another one? Coin. Let's take a look at coin. Yeah, I look at that. Coin still continuing very, very strong. XRP. XRP, is it this? Market cap? Is there XRP USD? There we go. Oh yeah, that's parabolic. But it's super low dollar price. But yeah, if you want to just buy crypto or like the actual coins instead of trying to do options or something, this is, I mean, it's getting a little overheated. This is definitely parabolic at this point, and we just at or maybe slightly above this high right here. So I'd be careful because I would maybe wait for a pullback. Even if this jettisoned higher, I'd still be waiting for that pullback. But XRP is definitely one to keep your eye on for a good entry point. This is not a good entry point. You might get lucky and enter here and still make money, but it's not what we would call a good entry point or a high probability entry point, or a high chance of profitability entry point. We would wait for that pullback. Okay, so I think that is about all. I did promise to talk about a trading plan. So let's do that. But for a trading plan, I've got to have a position I want to enter. So I guess I kind of have to look for something I might want to enter. So ITA or XLI. Let's take a look at XLI. See if there is something that I may want to enter. I don't know if I'm going to have enough time to. Maybe it'll just be the very beginning of a trading plan. Okay. So actually, you know what? Let's talk about a little bit of trading plan. Okay. So there are four main pieces of a good trading plan, okay, or trade, okay. So I'll call it of a good trade, and then we'll see how we develop a plan around it. And maybe all we'll get to talk about is these four main pieces today, and then we'll talk about plans afterwards. So the first piece of a good trade is the trade idea. The second piece is timing. The third piece is execution. And the last piece is the management. Okay? 4 different pieces of a good trade. And most people never think about this. They'll either think about execution, or they'll think about timing, or some combination of the execution and timing. But we have to be aware that a idea should start right here with a good trade idea. That trade idea could come from many different things. So, because a lot of people, they might, for example, when we said, hey, should I buy a put in the SPY right now? What's the trade idea? What's your trade thesis? Oh, I think there's going to be a pullback in the SPY. Okay, that could be a trade idea. But then you have to evaluate your trade idea. Okay, so let's do that. Okay, my trade idea is that we're up from the lows. If I do this low right here, we're up from the lows over 30% now. And my idea is that is too far, and that the market shouldn't keep on going higher before it makes a pullback or correction. That's my trade idea. Before I decide I'm going to act on this trade idea, I need to check my assumptions. The first assumption was that the market, after it runs up 30%, that it's time for a pullback or correction. And I need to know, is it going to be is it correction or is it pullback? Okay, so let's see. I mean, what's this one? Okay, that was 28%. I need some way of gathering data, right? I can't just make that statement in a vacuum and just trade it. Otherwise, I'm gambling. So here in this first example, we went 28%, then we pulled back 5.8. Okay, so that is evidence in support of what our trade idea was. Here, is this a great example? Because there are multiple baby pullbacks along the way. So maybe it's not a great example or a parallel of what we're talking about. So how about this one right here? That is 21%. So that's not as high as what we were talking about earlier. And then after a 21% move, that is a 6% pullback. And then it went back up, and then it actually went even further down to 8.5%, and then it actually went further down to 11%. So depending on which one I'm calling the pullback or correction, then we can say, okay, this is evidence in support of that trade idea. Let's look again over here. Okay, that's only 12%. Okay, there we go, 22%. So I need to know, what was this right here? Is that just a blip? Okay, and then what is this one right here? 4%. So that wasn't a blip. So is that the same thing? I don't think so. But we could say, even if it was the same thing, then yeah, it pulled back 6%. And what about this one right here? Okay, this is 47%. Okay, here's a 33%. Okay, so that's more along the lines of what we experienced so far. But what was that pullback? Actually, yeah, it was 4%. Before it went up and then eventually made it up to 40-something%. And then we had another pullback, which was 8%. So far, we're doing really well. Seems like we have a reasonably good supported trade idea so far. And I could keep on doing this and keep on trying to, try to confirm and verify that thesis. But so far, we've got some decent evidence that it's a good, solid trade idea. So that's forming my thesis right here. We're up roughly 30-ish%. And then what we saw was 4-5% pullback, which is down to the MA50. Not unreasonable at all. Great. I have my idea. Does that mean I trade it tomorrow? Maybe. Maybe not. Okay, that's where timing comes in. When is the right time for me to actually put money into this trade? Is it right now? If I do it right now, I actually spent the first 30, 40 minutes today talking about timing, whether or not it was the right timing to actually put in a trade in support of a pullback. And the answer that I came up with was no. I'm not going to repeat all the reasons why. I'm going to say, okay, maybe 2 weeks from now, and then maybe next week, but we won't really know for sure, or we'll have a much better picture on Monday. So maybe I should just wait for Monday and have that extra information before I make that decision. Because right now, based on right now, all we're doing is chopping sideways. This is looking very, very strong. And just because we're up roughly 30%, well, there was that one example where it went up 34% before the pullback. So why not? How do I know I'm not going to go up another 3-4% before I get that pullback? I don't know that. So right now, putting it in right now is premature. So the timing is off. The timing is wrong. So I would not put in that trade right now, but I would be patiently waiting and watching for the right time to actually go in and trade my trade idea. Okay. When it's ready, then I can decide on the execution. I can't decide on the execution if it's not the right time. Now, I like to tell my kids, you can't solve tomorrow's problems today. You don't know what it's going to look like. I have a girl, a teenager who's in college, and she's always going like, oh, well, what if this and what if that? 2 years from now, I want to transfer and I'm going to get this type of job. Whoa, hang on a second. Let's just make sure you get good grades this semester. It's like, whoa, we're solving the wrong problems here, because all of the stuff that you're trying to decide, oh, I'm going to apply to this school and this school and this school and this school and this school, that's a year down the road. So a year from now, is it going to be the same list of schools? Probably not. Okay. So we don't want to get to we don't want to get ahead of ourselves. Until we have the timing, it makes zero sense to think about or look at anything else. Yeah. And until we have the execution, we won't know how to manage it. Because do I have a 20 delta call or put? Do I have a 50 delta put? Is it a vertical spread? Is it a credit or debit spread? What is it? I don't know. How do I manage it if I don't know what it is? Okay. So we got to wait for that timing. So this is as far as we can go with that particular trade idea. And so tomorrow we'll look for a trade idea that I don't want to execute. I don't like to execute trades on Fridays, and because weekend can change a lot of things, and also because we're talking about options here, and options suffer time decay over the weekend unless we do a trade where time decay is in our favor. So, but in general, like if we're keeping everything super basic, we're just buying a simple call or simple put, then we're going to suffer time decay over the weekend for no reason. I could maybe just execute on Monday morning instead of Friday. So, but we'll find something that I can use at least as an example, and then we can go through all four of these and then developing a plan around it, around the trade. Okay. All right, so we're going to wrap up over here. Let's see what you guys are saying, actually. 4 pillars. Yeah, I guess you could call them 4 pillars, yeah. Mara we already looked at. Mara is looking pretty good, just a lot of, just very wicky. But if you're aware of that, if you're okay with your broker reporting very large P&L swings, then just hold right through it. Not good at analyzing asset charts. Prefer to follow services for entry and exit. Don't need a trading plan for this, do I? My plan is to follow alerts correctly, as long as you trust that the person who is providing you the alerts has a good trading plan. So, That's the caveat. If you're going to trust the person providing an alert, just you have to know that they're competent at what they're doing and they are developing a plan and they are following a plan. Okay. Teenagers will change careers faster than speeding bullet. That is right. That is right. Okay. All right, guys. Thanks so much. I thought this was a great topic, and we went over some really good stuff. Hopefully, you guys are continuing to learn. Have a great rest of your evening, and I will see you guys tomorrow. I love talking trading plans. All right, guys. See you later. 70 or above for delta is good. It depends on what you're trying to accomplish. I don't do generalities based on deltas. Okay. So this is perfect. This is perfect. Thank you, Tim. I can't determine the execution until I know the trade idea and the timing. Okay. So if you just say, oh, it's 30 days out or a month and a half out, 70 delta, is that a good execution? I don't know until I know the trade idea or the timing. If you're telling me that you're going to day trade something and you're going to go 40 days out on a 70 delta, I'd say you're out of your mind. You're going to make no money and it's going to occupy a huge amount of your capital, right? And if you're telling me, hey, I want to do a 3-month trade and you're only picking a 30-day expiration, and then again, you're crazy. So I need to know the trade idea and the timing before I can determine the execution, whether or not a specific delta is good execution. That is a perfect example. Thank you. Psychology of traders and how to deal with loss. We'll talk about plenty of that along the way. Yes. Okay. All right, guys. Thanks so much. Have a great rest of your day, and I will see you.